Hi everyone, it's Andrew here. So IAC is known as the anti-conglomerater, which explains this business model of they're building up small businesses, they acquire small businesses, they help them, they help grow them, and then when they can stand on their own 2 feet, they spin them off in an IPO to the world, and that returns the value to the shareholders with stock in this new company. Think Match Group, which owns Tinder. That's an IAC spin-off. So is Expedia, TripAdvisor, Vimeo. Now, IAC is this totally under the radar compounding beast that just deserves to get some attention. Now, the reason why I'm making these videos and running this channel is because I found that, look, financial content online, in my opinion, was not what I was looking for. A lot of it's quite disgusting. And I felt that if I show my things like my entire stock portfolio, that this transparency makes me vulnerable to criticism, but responsible for what I have to say. So I'm not into crypto, NFTs, or penny mining stocks. Here on my channel is just my no bullshit approach to long-term investing and wealth. Now, today I'm going to be pulling some of this information from a great write-up on IAC from Norris on Value Investors Club. Please go read that for more information. Now, this graph shows that an investment in IAC, if you add up all of the spin-offs, has been a fantastic return. Now, I think the strategy might be to decide when the spin-off IPO has happened, whether the IPO price is overvalued or undervalued. If it's overvalued, which can be the case with a lot of IPOs, then sell those shares and then reinvest them back into IAC again and just rinse and repeat. Or on the other hand, if the spin-off is a great business and fairly priced, just keep it. Let it run and see what happens, a bit like Match Group. Now, when studying this business, the big question is going to be about management. See, management is critical to this business. The track record has been great, but can they keep it up? Now, for this video, let me start with my thesis on this investment. There are many opportunities to hit a home run, just like a VC firm. So the idea is that you have hundreds of these different small startup businesses, all with lots of potential. They only need a couple of them to be big winners. Then when they do hit one of these home runs, they can spin it off and return value to us as shareholders. You can either keep these shares or you can reinvest it back into the parent. I really like that idea. They've been a proven long-term compounder now for multiple decades, and they have an unlimited runway. So let me explain why this unlimited runway is really critical. See, for a business like Berkshire Hathaway, they have a size problem. There is just not enough businesses that they can buy a stake in that will make a big enough difference. Like Apple, for example, that was a great investment, but they have to wait for a large cap great company to be at undervalued prices. Look, this is fine, but they aren't going to hit any 100 baggers. Now, where IAC is different is because they can spin off these successful companies, then they can redeploy money to smaller startups and small acquisitions. And this investing universe will always be available to them because they never get too big. Yet shareholders get amazing returns through the spin-offs. So they don't have a big fish, small pond issue. And this allows for longevity, plus I think improved upside because they could create like another Match Group or another Vimeo. And that is a huge home run from its tiny little startup days. Now, the reason this company is overlooked is because Match Group has now been completely spun out. So people aren't as interested anymore because they don't get Tinder. Also, IAC would never show up in a stock screener because its book value always gets cut when the spin-off happens. So if you're following its book value over time, it sort of goes up and up and up, and then a spin-off happens and it drops back down again, and then it builds back up again and then drops back down again. So it looks like over a period of time, over multiple decades, that nothing's really changed with the book value. But that's not the case because you're getting bonus free shares essentially in these spin-off companies. Now, following that book value is the share price because it looks disappointing over the long term too, which it is, but that isn't where the value is. It's in these spin-offs. So it's just a poorly understood business. Now let's look at evaluation. So Norris at Value Investors Club did great work on explaining the assets that IAC have. First up, we have Angie Home Services, and that is a listing website attempting to match service professionals with consumers. If you need something repaired or fixed or renovated around the house, well, you can find help on Angie. It's not some small startup. This has already been spun out as a public company, doing $1.7 billion in revenue a year. Now, the 85% that IAC owns is worth today on the open market about $1.8 billion. The next asset is MGM. So the MGM operates casinos and hotels. It's simple enough to understand. IAC owns a 15% stake in this business. So the value today for AIC of the MGM stake, well, it has a lot of debt, but things are picking up after COVID. The current market value that I think is actually about fair at the moment, maybe a little on the low side, but I'm happy to call it about fair value. So this 15% stake in MGM comes to about a $1.8 billion valuation right now as well. The next asset that I want to look at is Meredith. Now, this is a big suite of website properties. Now, I like website properties with great SEO and great niche markets, as they have proven to be a good place for advertisers looking for alternatives outside of Facebook and Google and Instagram for advertising. And I think this opportunity is great for the business because advertisers are moving away from Facebook and Instagram because of that iOS update last year. And that's been making things less profitable to advertise on those platforms. So alternatives are going to be important. Meredith have some great brands. We've got Better Homes and Gardens, Investopedia, People Magazine, All Recipes. Look, here's a list on the screen of all of them. Now, IAC acquired this business for $2.7 billion, and I think this has a lot of growth opportunities. There is a risk that they destroy capital here, but I think if they can reach somewhere near their projected earnings for 2023 of $450 million, then putting a 12x multiple on that would give it a $5 billion value today. So let's just call it $3 billion anyway right now, because we can be really conservative. Why not? Next is care.com, and this is an online marketplace for finding carers to come to the home. Great for older people or people with young children. IAC paid $500 million for it, and it makes about $350 million in revenue, growing at 20 to 30%. Look, it's hard to value, but I think it's about $1 billion based on the growth and those revenue numbers. Another asset that IAC own a part of is Turo, and that's the world's largest peer-to-peer car sharing platform. Now, Turo is very capital light because it actually owns none of the vehicles, and it's growing their available cars at 80% plus per annum and customers at over 200%. IAC owns a 27% stake in this, and the most recent funding round valued the business at about $1.2 billion. So look, let's just call it $250 million for IAC to be conservative. And they have $1.3 billion sitting in the bank ready to deploy. So there are plenty of other assets that apparently could be another $1.5 billion in value, but there is also all the corporate costs to run all these businesses. So I'm just going to call that about even. So adding all that up, we have Angie at $1.8 billion, MGM at $1.8 billion, Meredith at $3 billion, probably could be $5 billion, but let's be conservative and call it $3 billion. We have care.com at about $1 billion, Turo at $250 million, and $1.3 billion in cash. So all that adds up to $9.15 billion right now. Now, this is all conservative, and I believe a great price to buy the assets. Plus, you get all the free upside with the companies that IAC will grow, acquire, and spawn into the future. Now, Norris from Value Investors Club, he valued IAC at $16 billion today. And I can't get on board with that price. But about $9 billion is pretty conservative in my eyes, and I'm pretty comfortable with that's what it's worth. So with the IAC market cap at about $7 billion today, I'd be getting a discount, even after the corporate drag on the business, on my conservative valuation. So the next question that comes up in my mind is, well, why is the price so cheap? Well, I think it's because it requires digging to figure out what's actually going on here. It's not a simple business to understand. And I guess just general market sentiment at the moment. Now, if you are looking to invest in any stocks, I recommend Interactive Brokers. They are the best and the safest broker to use for your investing. There's a link in the description if you want to take a demo account for a spin, see how it works. I have demo videos here on my channel as well. And regarding keeping up with intrinsic values, I have an e-magazine where I share my thoughts on the market, plus my watch list and updating these intrinsic values. IAC will definitely be there. There's a link in the description for this as well. Now, the question I raised earlier still remains about management's ability to continue doing what they have historically been able to do. That is the key ingredient to this investment, and that is where I recommend spending the time in your research. And honestly, this is where I'm at the moment. I haven't got to a complete conclusion on this one yet, but I am working on it. I think it's a fantastic hidden compounder at a great price. The long history of share buybacks also is an interesting thing to investigate, whether they have been buying back shares on market weakness or have they just been buying back shares whenever. This could be a good clue to see whether they're good capital allocators or not. Anyway, give the video a thumbs up if you like IAC. Thanks for getting this far into the video, and I will see you next time.